Good morning. Happy Monday. It is Monday, the 9th of February. It is the morning blast with myself, Ryan, and of course, Michael. Usual warn, kind of explainers before we kick off. Nothing discussed in this podcast is trading or investment advice. This is a very candid look at markets in our own unique fashion. So this is why the podcast is labeled as explicit, because we do have potty mouths. Hopefully add a bit of value to your day and put a smile on your face. Michael, how are you? Good weekend?
Well, very good morning to Ryan. Good morning, everyone. Yeah, not too bad, actually. Nice and chilled. Obviously saw you on Friday, which was the sort of low light of things.
Stop
it. England then picked it up with a resounding defeat of the, well, I'll call them Welsh because we'll be polite, of the Welsh at Twickenham on Saturday.
It's just a shame they did score some points because it was looking like it was going to be completely one-sided at one point. But
I must admit I was a bit disappointed by that. But, we can't have everything. Onwards we go to the Scots next week.
And then we did have the Arsenal as well, which a resounding success against Sunderland. But then, unfortunately, Man City...
bloody Scousers couldn't do us a favour, could they?
Typical Scousers, really. And do you know what? It's probably Margaret Thatcher's fault.
Well, I was going to blame the Sun newspaper, but, it either works.
There you go. Right, let's crack on. So let's start the show.
Do we want any other sport that we want to talk about?
I've not really watched any of the Olympics, to be honest.
No, I saw someone had quite a nasty crash in the skiing.
Lindsay Vonn, I saw that.
Yes, that's right.
Anyway, let's move on. A market update from our good friend Clive Lambert at Futures Techs. What happened on Friday? Levels to watch, what the market's been up to. Friday saw recoveries in equities and metals to calm nerves after Thursday's selling. The S&P rallied throughout the session up to a high of 69.65. All-time high is up at 70.43. Eurostoxx 50 futures put some distance on support at 58.53 and starts this week not far from the all-time high at 60.86. The FTSE 100 bulls negated Thursday's bearish engulfing line with a solid stab of the green. 10,307 is Marabou's support now. Bund futures failed at 128.58 level and have been watching of late, along with the Fibonacci resistance of 128.34. It has set a weaker tone so far today, so I want to keep an eye on there. T-notes didn't hold the 112.06, so the bears look favourite again. There where we start this week. Cable got back a chunk of Thursday selling as dollar weakness is seen around the traps. Dollar yen seen some red overnight. That's obviously yen with the election result, which I'm sure Michael's about to go on to shortly. Bitcoin recovered on Friday just below $60,000 to reach $72,000 over the weekend. Gold saw green on Friday and so far today, so a chance to retest the 5,114 and 5,158 levels, then back to the high of 5,627. Silver has Fibonacci levels at 82.14 and 84.74 to retake to add weight to the recovery story. So still very volatile there. Palladium is also still recovering, but 117.67 to 75 is weighing for now. The bulls can get busy if they can retake this level or area. Copper, Dr. Copper is back above 13,030, so it might be cheer for the bulls. I'm certainly cheering. Brent continues to...
Talking your own points then.
No one else will. Brent continues to hold Marabou's support at 66.94. Friday saw a dip to 66.56 that found swift opposite response. So we're still looking for a return to the recent high at 70.58 in that one. Gas markets have all gaps lower this morning on both sides of the pond. Bit of weather there, or lack of. TTF gap resistance at 34.10. MBP's gap is up at 81. Euro carbon market staged a recovery on Friday to retake the 200-day simple moving average, which has seen a breach on Thursday. 80.56 and 81.53 are resistances to watch for any future gains. And finally, in the ag space, soybeans posted a shooting star-shaped candle on Friday. Get your book out. Getting right up to 111.37. Sorry, that's not 111, that's 1,137. Up to 6 where sellers returned. So some signs of upside rejection after some solid gains earlier in the week. Thank you very much, Clive Lambert.
Good stuff. Thank you, Clive. Thank you, Ryan. In terms of Friday and the weekend, then, we'll get on to the UK political shit show, or the latest episode of it, in a moment. Actually, I'm going back to what we were saying. I was surprised Margaret Thatcher hasn't been blamed for that just yet. I'll give it time. As for Friday and over the weekend, it was a relatively subdued but ultimately very risk-on end to the week. Last week, the S&P 500 ended Friday with gains of about 2%, the Nasdaq up by 2.2%. Of course, that just kind of brought us back to basically being flat on the week for both of those benchmarks. But nonetheless, dip buyers coming out in force once again, and on a relatively light day of data and news flow, helping to reinforce the idea that the bull case is indeed still intact and that the path of least resistance does still lead to the upside, as we were saying on Friday's episode, in fact. And it's always nice to give yourself a little pat on the back on that front. In terms of developments as the week drew to a close, as I said, it was relatively light in terms of news flow. Of course, we did have those talks between the US and Iran, which took place in Oman. It seems like they went relatively well. I would caveat that by saying there wasn't a sort of formal readout from those talks, and nothing has yet been formally agreed. However, the Iranian foreign minister was saying that these indirect talks were what he called a good start, and that they have agreed to continue with talks at another time, although the date of that is still to be decided in the future. I wouldn't say this has sort of materially reduced the risks that there is going to be a military intervention at some stage, but at least the two sides are talking, and we haven't had that military intervention just yet, although the US does still have a hell of a lot of firepower in the region. So we will, of course, keep that on the radar. Other than that, speaking of the equity rally, we heard from President Trump late on Friday with a couple of Truth Social posts. The first, and I quote, "The Dow Jones Industrial Average has just hit 50,000 for the first time in history. Congratulations, America." The second, "I am predicting 100,000 on the Dow by the end of my Remember, Trump was right about everything." Now, setting aside the slightly, should we say, ambitious nature of the Dow doubling in the next 3 years, I think that does help to serve as a useful reminder that if anyone was doubting that there is a Trump put in this market, it's pretty clear that there is one, given the way he is touting those equity gains.
Yeah, and obviously, if this do try and forget that he's quoting the Dow, which we hate on the show.
Yes, exactly.
But this follows like a week before, after there was a dip in the markets, where literally the White House Twitter account put out the S&P
about the all-time highs
has hit 17 all-time highs, in this term so far. We're gunning for more. I mean, when the president and the administration are basically telling you one of their kind of milestones or one of their targets is equity prices, I really struggle not to be buying any dip possible. And I know something we keep saying, and probably at some point we'll end up with egg on our face, but you can't really go against the market when someone like Trump is out there saying, "I want higher stocks." You know he's going to do everything possible to make that happen. Because one thing's for certain, him and his family are probably long up the year.
They are long. Yeah, 100%. And I think you're absolutely right. It comes back to that old thing of, we always used to say, don't fight the Fed. When the printing presses are turned on and QE is coming into the market, you don't fight that. No. I think it's the same thing here. If Trump is either metaphorically or potentially physically long somewhere or somehow, then why the hell would you be fighting that?
Exactly.
Yes, the market is not going to go up in a straight line. Yes, there are going to be, opportunities for tactical shorts here and there. But, realistically, I think that just reinforces the idea that actually this is a raging bull market, and the administration are gauging their success on that. So they're going to do everything they can to try and keep things going on that front. Anyway, we will see how long it takes for us to end up with that egg on our face over that one. Someone who didn't end up with egg on their face over the weekend was the Japanese Prime Minister Takaichi, of course, going to the polls in a very short election campaign to try and capitalize on historically high approval ratings that were around the 70% mark at the start of the campaign. It worked. It went very, very well indeed. Takaichi not only winning a majority, but the LDP winning a super majority in the Japanese lower house, winning more than 2/3 of the seats in the lower chamber of the Diet. The reason why that is important is because it now means that the LDP are able to override any votes in the upper house using that 2/3 super majority. As a result, it really does make the passage of various bits of legislation, including budgetary legislation, considerably easier and considerably smoother than it otherwise might have been. Markets, though, it must be said, have been kind of oddly subdued in the aftermath of this. We did see big gains coming through in the Nikkei overnight. Nikkei future up about 4% when I last looked. But the yen is trading pretty much unchanged, whether you look at dollar yen or whether you look in some of the crosses. And moves in the JGB curve have been pretty flat as well. I think the 10-year JGB was up by about 4 basis points on the day, which is hardly a lot considering some of the moves we've seen. Things were even more contained at the ultra long end with the 30 and 40-year hardly budging at all. Why is this? I mean, to give you the honest answer, I don't really know. We did hear some comments from the Japanese finance minister. Well, actually, it would have been on Sunday night, Japan, so Sunday afternoon here in London, who was sort of stressing how the consumption tax cuts that Takaichi has been promising are going to be limited in terms of time for 2 years and also in terms of the scope, only applying to food. We also heard the finance minister again saying that they are not planning to increase JGB issuance, which has probably also calmed the degree of any nervousness that may have been in the market surrounding the election result. Or there is simply the argument that actually it was just priced in and the result is in line with all the opinion polling, so there's nothing new for the market to discount.
I think you've given at least 3 reasons exactly why we've seen very muted response. I think that's exactly the reason why.
Yeah, so it's certainly something to keep an eye on because, of course, Takaichi can now basically do what she wants, not only from a political perspective in terms of the arithmetic in Parliament, but also having this humongous personal mandate. I think, and someone is going to fact check me on this, I think it's the most number of seats that the LDP have ever won in the Diet, in the lower house. So in terms of a mandate, it is absolutely huge. So it is certainly something to keep a very, very close eye on as we move through the coming days and weeks. But regardless, markets really taking that in their stride for the time being. Just a couple of other things from the back end of last week before we move on to the inevitable rant that we're going to have about the shambles here in the UK. We did have a few bits of data out on Friday. Just to wrap up the week, the latest Canadian jobs report was a little bit soft at a headline level, with employment falling by almost 25,000 in the month of January. But it's important to actually dig into the details of this because pretty much all of the fall in employment came from a loss of part-time jobs, and actually full-time employment was up by 45,000 in January compared to where it was in December. So I think what we've seen here is basically all of the temporary workers that were hired over the holiday season were then laid off when that holiday season came to an end, as you would expect, and that has just skewed the headline number lower, which explains why the Canadian dollar didn't really react to the numbers. We also had the latest consumer sentiment data from the University of Michigan to round out the week. The UMich gauge rising to a 6-month high, 57.3 in February. We also had cooler than expected inflation expectations on both the 1-year and the 5 to 10 year at 3.5% and 3.4% respectively. That just is an interesting one, actually, because it comes basically a week after we had data from the Conference Board, which showed consumer confidence at its lowest level since 2014. So very much one that, you've got enough data there to confirm whatever your priors were before the releases.
Absolutely. Is that it from you?
It is, yeah.
Wonderful. Okay, well, today's topic du jour is the absolute shit show that is UK. I'm not going to mix my words here. The UK shit show that is, the shit show that is UK politics. So, UK political turmoil, obviously, over the weekend. Morgan McSweeney is gone, which is Starmer's chief of staff, the man who built the election machine that delivered the landslide majority, resigned yesterday over the Mandelson disaster. He took full responsibility for advising Starmer to appoint Mandelson as the US ambassador and called the decision wrong and walked. So that's Sue Gray, who was obviously the chief of staff before that. She left in October 2024. McSweeney's gone in February 2026. And Starmer now running a government without the two people that are supposed to be running it for him.
What Starmer's done there is what you and I do to Tom Wiseman, which is namely find the nearest bus and throw someone under it.
No, exactly that. And the thing is, the numbers tell the story here. Starmer's approval rating is minus 44. Some surveys actually have him as low as minus 50 something. And that's the worst of any PM in 50 years of polling. Labour is on 22% behind Reform on 30. One projection has Reform winning 381 seats at the next general election, which would drop Labour to 85. And that's a 326 seat loss from the landslide they won 18 months ago. 55% of the people think he resigns, but that's only part of the situation, or that's only part of the equation, sorry. It's all about who or what comes next. You've got a by-election in Gorton and Denton on the 26th of February, which everyone is looking at. If Labour lose that, this could be all over. And then you've got the May elections where Labour could lose Wales for the first time ever. What does this mean for gilts? What does this mean for, sterling going forward? I think the problem is, and as Michael, I'm sure, is about to touch on, is the leadership contest or who replaces Starmer. It's basically Rayner, Streeting, or whoever will fight out with Reform. Obviously, Burnham at the moment not looking likely, but Rayner and Streeting far more lefty than Keir, and the gilt market's going to have something to say about it.
Yeah, and the gilt market is already having something to say about it, with the 10 and 30-year yields having risen by about 4 basis points already this morning, and we're only 3/4 of an hour into the session. A few things, because obviously there's a lot of moving stuff. Well, there's that, but what I meant was moving parts. I think the big problem with all of this, just to kind of contextualize where we are, is, and this is why I don't think that throwing various people under the bus is going to do anything, whether it be Morgan McSweeney. There's also some chatter in Westminster that the cabinet secretary could be shuffled onto another job. The problem with this is that the reason why this is such a big issue for the Prime Minister is because it is his own judgment that is being called into question.
Or lack of.
If you think about all of the other U-turns and just general bullshit that's been flying around Westminster for the last 18 months, whether it's measures in the budget, including winter fuel payments, business rates, things like this digital ID, various things they've tried to do in terms of immigration, jury trials, no jury trials, whatever it is, all of that can reasonably be pinned on someone else in another department or in another part of the Whitehall bureaucracy machine. The problem with this particular incident is that it was Keir Starmer and Keir Starmer alone who went, I think Mandelson should be our ambassador to the US, and I'm happy to, look past or look through or conveniently ignore all of the stuff that he may or may not have done previously involving Jeffrey Epstein. It's not a case of you can reasonably go, oh, well, that was Morgan McSweeney that told me to do that.
Yeah.
It wasn't. It was you that chose to do that.
I do think you're being a little bit kind to say that the rest of the shit decisions weren't really on him. But yeah, no, I completely see your point.
And I think the issue with that is, of course, all of the documents regarding Mandelson's appointment have now been handed over are being handed over to the Intelligence and Security Committee in Parliament, and potentially also to the Met Police. We do not know what's in those documents. There could easily be some emails in there that Keir Starmer has signed off going, big thumbs up, I think he's a great appointment. And there's very little, if any, way that you can get away from that or hide from that. I think the reason why Keir Starmer is probably not in as much sort of imminent danger as a lot of people are kind of trying to make out this morning is because there isn't a ready-made successor just sat there waiting to strike.
Although Rayner was in the papers at the weekend getting her hair done.
God.
It's all about the optics, mate. All about the optics.
I had my hair cut on the weekend as well, but I'm not running for
both of them.
Yeah, exactly.
Still
cost me 20 quid.
I tell you what makes me laugh is not any other time, any other situation like this, the Chancellor's name would be mooted around as like a temporary replacement.
Yeah, no chance.
Not one person I've not seen anywhere, and I mean even on Twitter, I've not seen anyone ever say, oh, maybe Rachel Reeves will be a temporary replacement.
No, because she won't. But I think, it's almost now a case of, Starmer is Prime Minister by default because there's no one ready to take over for whatever reason. You think about the likely contenders, Andy Burnham, well, he's not an MP, so he can't take over. You think about Angela Rayner, who you obviously just mentioned. Well, fine, she's kind of trying to get her name back into the headlines, but she's also got all of these unsettled issues with the HMRC.
That's still not
which isn't sorted, and it doesn't look like that's going to be sorted particularly quickly. Other people within the Labour Party are the sort of upper echelons of the party. Wes Streeting, for example, he has gone very, very quiet because one of his sort of political mentors was Peter Mandelson. So unsurprisingly, he is now potentially going to be tarnished with that brush as well. So I think it's very much a case at this point of the reason Starmer is the reason this isn't Boris, where he ate a bit of cake and he was gone, was because there's about 20 people waiting to take over.
Yeah.
That's not where we are right now.
Well, just to be clear, so just a kind of a runners and rider. Obviously, Angela Rayner is the favourite with Labour members, but HMRC is hanging over like the sword of Damocles. Oh, look at that with the highbrow.
Oh, very good.
Wes Streeting, Bookie's second favourite, polished media performer, but tainted by his Mandelson ties. And he's seen as, quote, too right-wing by the membership. Well, that's very subjective. That's not my word.
Has anyone used Wes Streeting and right-wing in the same sentence?
I think this sums up kind of how left the opposition to Starmer is in the Labour Party. Then, of course, you got Shabana Mahmood, the dark horse, impressive as Home Secretary, tough on immigration, but relatively unknown nationally. Although, obviously, got to be said to her that she has come out the traps very strong as Home Secretary. There's, she's tidied up quite a lot already, and there's a lot more to do there. Then, of course, you've got Andy Burnham, hugely popular, but as you said, not an MP. Ed Miliband, popular with the soft left, thumb it in, but members already lost a general election, describes recovering from his first leadership stint as, quote, traumatic, and also the decisions that he makes and his kind of warped opinions on net zero, and that would be incredibly bad for the UK economy, in my personal opinion. But here's the thing, the key point is any challenger needs 80 Labour MPs, 20% of the Commons, to publicly nominate them. That's a much higher bar than the Tories' 15% confidence vote threshold. So, few things going on. And like I said, it is an interesting one because at what point do the Tories feel emboldened and, how's this going to play out? The fact is, though, I think it's going to be very hard until something is tidied up or cleaned up. I think it's going to be very hard for Starmer to do anything in power. He's a complete lame duck at this point. And let's be honest, he was a lame duck beforehand. Our good friend Helen Thomas said the day after the election to me, do you know what? The fact that they've won so many seats is probably a curse for Starmer because there's so many people within the Labour Party that actually don't like him or MPs that have different views on how the country should be run. And she's nailed it. No surprise, she's an incredibly shrewd operator when it comes to UK politics. But yeah, even more so, I think we're in a very difficult position now with the UK. The only upside I can ever see at this point is France are in a worse position. And
well, yeah, exactly. That you do look around and there is just political shambles everywhere. I think just to sort of finish up on this, the key point in that sort of runners and riders list is, I know we were joking about Wes Streeting being too right wing, but all of those contenders are going to have to be further to the left of the current administration, because if they're not, they simply will not carry the support of the Labour membership, who are a long way to the left of where the parliamentary party are. So this is why when you look at gilts, for example, you would say that actually political uncertainty is a worry enough for a fixed income market, certainly in developed markets. When you add on top of that a degree of certainty that whoever comes in is going to be basically day one appointing a chancellor that tears up the fiscal rules, ramps up issuance, starts chatting nonsense about things like wealth taxes, increasing public spending even more, blah, blah, blah. That's basically a sort of double whammy of downside for the gilt market.
So that's an interesting point then. So do you think that if Starmer goes, Reeves is also out by default?
100%.
Yeah, you don't think...
If Starmer goes... Yeah, you could end up with a situation where there's he's kind of interim prime minister, not really, well, which basically he is now. But the first thing that will happen is whenever that new Labour leader is appointed, their first cabinet change will be to get Reeves out and get their own person in. And whether that is, someone who's already there, dare I say, Torsten Bell, God help us, or whether what you could see happen is, for example, some of those runners and riders end up clubbing together. Do you have a situation where Angela Rayner runs for leader, Ed Miliband can't get enough support on his own, so Angela Rayner goes, actually, do you know what, Ed, do you fancy being chancellor under my premiership? Yeah, none of this bears thinking about, but at the same time, they're kind of the scenarios that could happen to quickly narrow down that field of contenders.
No.
So, yeah,
I'm with you on that one. Just a couple of in terms of key calendar dates, because obviously things like this almost always happen around certain events and whatnot. So we got the Gorton and Denton by-election on the 26th of February, to a couple of weeks away from now. Previously a Labour safe seat, Greens or Reform could win it. This would be outright humiliating for Starmer. personally, I think this could be like the kind of date that if they do lose this, that we could then see Starmer kind of relinquish his power and say, okay, look, time to find someone else to replace me. But this is where he could then stay on as an interim, or kind of just that interim kind of janitor of the UK Labour Party, and until May elections. And so we could have, theoretically, and again, this is kind of no one knows for sure, but we could have basically the entire month of April and much of May and some of Feb, where Starmer is just sitting there, just keeping the lights on in Downing Street until the local May elections. And then we can actually see where the dust settles. And in my opinion, I think me and Michael have said this many times before, I'd be shocked if we get a full-blooded replacement of Keir Starmer before the May elections, because no one is going to want to replace Starmer when it looks like the unknown of the May elections is not that unknown, because it looks like they're going to actually do their arse.
It's going to be a bloodbath. But yeah, we will watch that very closely. The other key date, just for reference on there, is the House of Commons actually goes into recess on Thursday for about a week and a half. So just bear in mind that MPs will not be in Westminster, which Keir Starmer may go, well, that's great, they're not going to be gossiping in the pubs. Actually, it's worse, because they're going to go back to their constituencies and have a week and a half of people going, that bloke's an absolute tool. What are you doing about getting rid of it?
Yes, quite. Well, look, there's going to be plenty more to discuss on this. But anyway, what is going on today and the rest of the week, my dear friend?
Indeed. Well, today there's not really anything going on, to be honest with you. The data docket is completely barren across developed markets. We do have a few central bank speakers, though, including the likes of Fed Governor Waller and Governor Myron. ECB President Lagarde will also be testifying to the European Parliament, which will not be particularly interesting, if we're being completely honest. Having said that, though, it is a busy week ahead in terms of US data releases. That kicks off tomorrow with the December retail sales report. Then on Wednesday, we get the delayed January jobs report, with headline payrolls seen having risen by 70,000 last month, and with unemployment holding steady at 4.4%. And then, of course, on Friday, we get the January CPI numbers, with both headline and core inflation seen having risen by 2.5% on a year-on-year basis. So it could be quite a busy week in terms of potentially shaping expectations for that next Fed meeting. Although do bear in mind that we will get both the February jobs report and the February CPI numbers before that March FOMC discussion. Besides that, the data docket is somewhat light. We do get Q4 GDP figures out of the UK on Thursday. The economy set to have grown by around 0.2% in the fourth quarter of last year. A lot of that would be mechanical, as auto production comes back online after the Jaguar Land Rover shutdowns. We also get the second read on Q4 GDP from the Eurozone. That comes on Friday. Besides that, it is a fairly chunky week of Treasury supply. We have a 3-year auction tomorrow, a 10-year auction on Wednesday, and then a 30-year sale on Thursday. And it's also a fairly busy week of corporate earnings once again, highlighted by the likes of Coca-Cola, Spotify, Cisco, McDonald's, and Coinbase. Do bear in mind that according to data put together by FactSet, we are currently seeing... What?
Is it just me? I always got to say that very carefully.
Yeah, I can't say it. I have to really enunciate when I say that one.
I'm so close to saying fat sex every time.
Yeah. But according to data compiled by those people, who I shan't name again, we are currently seeing blended earnings growth in Q4 of just over 11% on an annual basis. If we realise that through to the end of earnings season, that would mark the 5th consecutive quarter of double-digit earnings growth. Of course, we came through the bulk of those mega cap reporting, or those mega cap reports last week, and I think participants are sort of slowly but surely starting to look forward to Nvidia earnings, which come in the last week of February. But nonetheless, some useful bellwether stocks in the mix this week regardless. And of course, continuing to focus on geopolitical turmoil in the Middle East, any progress there, and also what's going on the trade front, and frankly, anything else Trump wants to talk about.
Exactly that. Well, Michael, thank you so much, as always, my very dear friend. I'm not sure what day I'm going to see you this week for a beer, but there no doubt will be at least one. Listeners, hope you had a great weekend. And I hope you have a very profitable week ahead. We'll be here every morning to hopefully put a smile on your face and potentially a bit of value, but who knows on that front. And whatever you're doing today, keep